Welcome to the Pennywise Financial Podcast. Constantine here at Monarch Wealth Management, and I have a guest today. His name is Charlie Forte Jr. Welcome to the show, Charlie.
Thanks, Constantine. I'm glad to be here.
Likewise. So, I thought it was important to have this episode and bring in Charlie as a guest to tell his story. And I think he has a very compelling story, an important story that he wants to share with both current clients as well as prospects. So Charlie, let's back up. Charlie is a part of our team here at Monarch Wealth Management, and I'd love to hear a little bit more about your background and your career path leading up to this point.
Sure. Well, thanks for asking. I think I'll start kind of at the beginning. I started off studying accounting at Bucknell University and then wound up getting an MBA in finance and accounting at the Simon School at University of Rochester. So they kind of set the background for the kind of the I guess the knowledge base, if you will, going in. Started off working at large corporations like Xerox and Kodak, and the great opportunities. Learned a lot of really good skills. Had a lot of opportunity to work in a lot of different environments, and then wound up working at other companies along the way, like a small photonics company, a startup company here in Rochester, and for a couple of nonprofits. And
Wow.
it's kind of neat, all of which I'm so grateful, all of which kind of all added upon each other. Just the different things I learned in different areas I found very, very useful in other areas. And yeah, we can talk more about some of the specifics as we go on, but just kind of one of the things that was really neat was my um, last job before I technically retired was as director of finance at Goodwill of the Finger Lakes here in Rochester, which is also contains the Association for the Blind and Visually Impaired. So nonprofit with a pretty cool mission. And really what I found was what I learned in the past really was helpful in that in particular environment. Some of the things like planning, budgeting, forecasting, accounting, cash management, even investment was experience was very, very useful in that particular environment. So, like I said, we can talk more about that, specific aspects as we go on. But that's kind of an overview. So, yeah, it's been over 40 years of a professional finance
It's
career.
a lot of
Really
experience.
grateful for it.
So
Enjoyed it.
are you born and raised here in Rochester?
No, I grew up on Long Island actually.
No way. Did
Yeah,
not know that.
yeah,
Learned something new.
yeah. So that was kind of cool. And but then I went away to school in Pennsylvania and really never came back full time. I just got settled here in Rochester, got a job, found my wife, and raised our family here. So we've been in here. We've been in Rochester since late '70s.
It's been honestly, it's in. I lived in Jersey, and I traveled a bit for work in my early adult life, pre children, pre married, all that good stuff. And I have to say, despite the grayness and the kind of the lingering weather, it's a great place to raise a family. Really
Agreed.
is.
Yeah, I agree with that. We've always enjoyed the park systems, just the resources that are around here and the community. We've had a lot of very good resources here. I love music and have being close to Eastman, having the concerts has always been a neat thing for us as well. So we've just been very grateful for that.
So, what brought you to the area? Was it Xerox?
Now, it was University of Rochester, and so spent 2 years there getting the master's, and then got an offer to work for Xerox, and never looked back.
Wow. Okay. Wow. I can't believe it. So yeah. All right. So do you still have family back in Long Island?
We do. We were just down there this past week visiting. It's great and nice to connect with them.
Very good. Very good. Okay. So sounds like you have a pretty compelling resume of different companies here in the local area and local community you've been a part of.
Mhm.
Um, what motivated you? What was your passion to say, you know what? I'm gonna hang up my hat, but maybe not, and start down this path because it sounds. I mean, they're very similar. It
Mhm.
sounds like there's a lot of commonality in some of the things you've done before.
Mhm.
But what was your motivation? What got Charlie to say, you know what? I want to go out and hang my shingle and showcase my abilities to help people.
Mhm. Well, I think it was a matter of kind of figuring out what is important to me. As I quote retired, I had a couple years where I just kind of enjoyed getting set up, getting myself acclimated on some, doing things I'd like to do, and some of the practicalities like getting set up on Social Security, Medicare, all that kind of stuff you need to do. But I was having a sense that, here I am sitting on all of the experience, the knowledge, perspective, and things acquired over the years that I thought really could be a benefit to people. And I thought, I love the finance part. I love the technical part, the analytical part, and I also like helping people. I really enjoy, working with people, and really throughout my career, one of the things I've really enjoyed very much is having the relationships with people. Being kind of a mentor at times, learning, being a mentee at times, being able to provide coaching, counsel, whatever, just business advice. In addition to doing the technical finance stuff. And also, pretty much most of my grown up life, I've had an interest in investments and managing money and doing it well. And doing things well and being able to add value has always been important to me, very satisfying. Kind of that's really what kind of drives me to a large degree. And I'm thinking, God willing, I could work another 20 years plus. And I'd like to do something that I find fulfilling and meaningful. I thought, a really good way to do that and to really be helpful to people, because that's really what I want to be at this point, is to use what I've acquired over the years, to be able to help them. Because I realize that financial well-being is a very important part of people's lives. And I also see, that enables them to do things that are important to them, to have the kind of life they would like to have. And I've also seen the value of things like foundations and endowments, where there is a long-term lasting, if you will, almost a perpetual benefit that can be given to important things that get done. So I thought, I really would like to be involved with that. I love to learn. I love to grow. I love to, like I said, share that with people, because, again, this is really not totally new to me. Over my professional life, adult life, I've had opportunities to help a lot of family and friends, just kind of, non-professional, if you will, but I found the things that I was learning and growing in personally with, learning about my own finances, and also the things that I acquired through my corporate experience were very valuable. I mean, helping people with their budgets, helping people doing, retirement planning. I had some opportunities to help people set up trusts, and just things like that. And I found that give the advice I was able to give, whether it's investing or, legal stuff to people, just referring them to attorneys, of course, but, getting them started in the right direction. That was very meaningful to me, because I saw that I really believe that it was helping their lives, helping them to get more grounded and have a better life. So I just wanted to do more of that. So I thought, well, I've got the opportunity now to do this in a bigger way, go professional with it, and really just expand it. So that's why I'm doing it.
When you mention the rewards, the it's not so much accolades, but the benefits of helping individuals versus a large corporation, a company, endowment, thing like that. Although those can be rewarding in their own respect, but when you work with people one on one, there is something to that. There is, yeah, and there's a painful part of me, because when I think of the people who need the help the most, tends to be, middle class, that don't have a lot of experience, and certainly not the kind of experience you've had over the years. And they tend to be the most gun shy about things, and the most in a hurry, if you will, to see results. When I say that, I mean, if you have a client that has $5, $10 million, they know probably what it means to fail. They said, "Geez, what do you mean fail? They're successful." I'm willing to bet you they failed one or two or five or 10,000 times before that you don't see. You don't see those failures. They don't talk about those failures to people often, right? And maybe people don't even realize they're there. But you have Susie Smith, who hears about her neighbor bragging about their great investments, whether it be in crypto or some kind of big score they had, right? And they did it in 6 months or 1 year, and of course they never lost money. And Susie Smith sits down and meets with me or someone like you, and they invest in the market, like a 2022. And after about 6 months of losing 35%, they say to themselves, "Geez, this is really not for me. I just lost a lot of money. I think the stock market is all rigged, you know, and then they cash out and they go away, despite your advice and saying, hey, we sat down, we defined your time horizon, we understood the fact that you could lose up to 50%
Hmm.
or more, and you were comfortable then. But now that it's actually happened, you're no longer comfortable. Those are the people who actually need the help the most,
Hmm.
in my opinion.
Hmm.
And they never allow it to come to fruition. They're not patient enough. And I think it comes down to education and background.
Hmm.
You mentioned some of the things. It sounds like you were very motivated throughout your career. And, my family is first generation. I don't know if you know the story about me when so my parents came here, and when they became U.S. citizens, it was a big deal. We celebrated. I remember my parents studying, talking about different aspects of politics that I didn't know as a kid, and I think I was maybe 10 or 11 when that time was. So it was no longer a green card. It was I'm a U.S. citizen. My parents were proud of that, and they used to brag about people that they had worked with over the years that have bought stocks and made it big, almost like a lottery ticket. And I think that's how some people view it.
Uh,
But I had no real investment experience. I understood some of the aspects of investing as a kid. I remember early on in my consulting career, I had maybe 30, 40,000 in cash in a savings account as a 24, 25-year-old kid. My bank never called me, never educated me. I didn't know there was more. I was hoping the savings rate would go up, and that was my way to make some big money.
mm,
Remember those days when savings accounts used to pay 4 or 5%?
I do. I remember the days when they paid almost nothing, not too long ago.
Crazy. I mean, so we're in an environment now currently where it's starting to pay again. And I'm not sure what accounts are paying for, maybe 2 or 3. Some online teaser rates around 4 and change, and of course those fluctuate. They're not like a locked in rate. But okay, so we learned a little bit about your background, your passion, what kind of led you down this path in career and motivated you. Any mentors that come to mind, or any type of inspiration that you want to share that maybe helped you along the way?
Sure. Well, I guess I would have to say one of the first and significant influences was my dad. He was a very smart man, a very disciplined man, and he was a good investor. And he kind of taught me a little bit about saving and investing early on. And throughout the years, kind of introduced me to various concepts, and in a very gentle but wise way. And
When you say early on, are you talking as a boy, like throughout the years, a little bit at a time, or are you talking like as an early adult?
well, the reason I'm smiling is I remember back when I was about sixth grade, opening my first savings account. Of course, it was a custodial account, but helping my first savings account, and I had some goals in mind I wanted to save for. And I remember putting money away and watching the balances grow. They didn't grow very fast, but they grew bit by bit. And I kind of learned the value of saving, and planning for what you want to acquire or have. And helped me a little bit when I was going to grad school. Also, some savings I accumulated over the years, working and saving and so on. So, and I just watched how the value of time in investing and growing money can be. And, and I saw what he had done was a benefit to the family, and he had helped others as well. He was not a professional advisor, but he knew his stuff pretty well. He was in business, and his work had given him proximity to investments. He was a manager of benefits for a Doubleday company. He managed the pension program, a lot of other things. So he had a lot of access to different, professional
What was his
resources.
background? Was he accounting or?
Um, yeah, he was a business major. Business. I think he did some accounting, but he was one of the earlier MBAs, I guess you would say, back in the day when MBA was not so popular. And he worked in insurance, worked for Prudential, and kind of worked his way up to Doubleday, but gradually increased in responsibility. And
Not as a an insurance producer or broker, right?
no, not as a broker, but really as a manager,
Okay, so
case
actually
manager.
for an insurance company.
Right,
Okay.
right. So he influenced me quite a bit, kind of getting into finance. And then I would say later on in the years, one thing that was really I was grateful for was when I worked for Goodwill. When I was director of finance, one of my responsibilities was oversight of the investments for the company, for the agency. And that would include the endowment funds they had and also the pension funds they had for the pension plan. Um, and I was able to I participated in the investment committee meetings. I did some supporting work for them. And I was able to really learn from the advisor. We had an institutional advisor who was very good, a local advisor here. And I learned some very good principles from them about how to invest, and grateful for that. I was able to ask questions and learn different things, and I found that to be quite influential. And I really look forward to doing more and more application of that, going forward. I've already done a lot of that in my own work, but that was I would consider them mentors as well, and in an indirect way, but it was very helpful to learn. So, and I really appreciate what you're saying about people needing to have patience in the market, patience in investments, and to really understand the nature of investments. Because just what you described, I think it's human nature to say, "Oh, gee, things are going lousy. I better get out." That's the worst thing you can do. The because obviously you're gonna lose, and it's tough to gain back what you lost at that point. And over time, the market has consistently come back and grown and grown and grown. So riding out those waves with some level of patience and confidence that things will turn around is so important. I've also seen studies where that show that if you stay invested, you'll be far better off it than if you try to time the market. Because there have been studies that have shown that there are a fairly small number of days when the really big gains have taken place, or small time periods. And if you missed even a few of those, your aggregate return over the years would be substantially lower.
Oh yeah.
So to me, that's an exciting thing about being a financial advisor, because I think that one of the things I really want to do is to be able to instill a sense of confidence and trust in myself as being a person's advisor, where I can explain and help them kind of navigate through some of those ups and downs, and try to, exercise strategies and practices that over time will give the best reward. And that's really a lot of the value we can add as an advisor. And I'm so grateful to have the opportunity to do that.
Yeah, I really do. There's a Vanguard study. I think this is going back maybe 6 or 7 years now. I have to share it with you, but talks about the implied value of working with an advisor. You may know it, um, and when you try to put a percentage or a dollar amount on that value, they come up with a number around 3.5, almost 4%. Geez, 4%. What advisor is charging 4%? No one. No one's charging four. Um, and that would, in a sense, be a break even. Why would you want to pay an advisor if you're giving up the advisory, all the benefits, and paying that out in advisory fees? But let's work on even just half of that. If it's 2%, geez, 2% is quite a bit. On every $100, you're talking about $2 and $20 for every thousand. Every 100,000, you're talking about a couple of thousand each year, as those accounts are growing over time. And to say that it's 2%, how do you come up with that calculation? It's some of the things that you just talked about, that you just touched on. Missing those important days throughout the year could amount to 5 or 6% in return. Whereas if you were doing it on your own, you'd fail. And if Dave and I, we love correlations. We love looking at things and comparing them to something else that we might understand that's true, near and dear to us, or true to home. So when I think about some of the things that I had done over my life, one of my biggest accomplishments, I was really, really overweight at some point in college, maybe 250 pounds. I think at one point it was like 245 pounds. Knew nothing about working out and diet and exercise, so I started going to the medical library. Started reading about nutrition and balance and exercise. And I set myself a goal. Okay, it wasn't a goal of get fit. Right? That's a pretty basic goal, right?
Hmm.
It's like saying, and I've had this happen before, where somebody comes in and they throw their statement down. They say, "Make me rich." Okay, great. What does that mean? Well, what do you mean? Just rich. Does that mean a couple extra zeros? Does that mean $10,000? Does it mean 5,000? Does it mean 5 million? Defining a goal that means something. tangible, like an actual goal, a figure. Is it a time? Is it I want to retire at 50 with X? And the reason I point that out is along the way when I was exercising and trying to reach my goal of, and I don't know if it was losing 60 pounds and adding 10 pounds of muscle and bringing down my body fat. I think I got one point, it was around 4.5, 5% body fat, which is pretty lean. I wasn't a very large person at that time, but it was pretty low. Along the way, if I stopped at any point when I had a setback and just gave up, threw in the towel, says, you know what, this isn't for me. This is not working. Couldn't tell you how many times I would have quit, but I didn't. And, I think about investing, and that's going to happen. It's a practice. It's like a physician. You come in, you do surgery, and you think the outcome is going to go this way. And the human body can say, oh, no, Charlie, you're not doing that. And things happen. Things develop. Things change. Same thing with your investments. They do change. I promise you. You come out with the best plan on earth. 190-page document. You're 25, 30 years old. Your life will change many, many times along the way.
For sure.
So you got to have a passion. You got to have some patience with that, right? Okay, so some motivation, your history, some influential people in your lives. Sounds like your dad was a big part of that. With that, I think this is a good place. Let's take a quick break, and we'll be right back with the show.
Do you want help building and managing an investment portfolio that's right for you? One that will help you maximize growth potential while you're saving, help you generate income when you need it most, and eventually preserve what you've saved to leave to your beneficiaries? We do this day in and day out and take the stress and responsibility of making those decisions off your plate. Subscribe to our newsletter, read our blog post, and listen to our podcast to get a flavor of how we do things. Our firm is unique and capable of handling all your investment and insurance needs. Monarch Wealth Management, our guidance, your future.
Welcome back to the Pennywise Financial Podcast. Constantine here at Monarch Wealth Management with my guest today, Charlie Forte Jr., MBA colleague. He is a financial advisor here at Monarch Wealth Management. And we learned a little bit about Charlie's past and his career and his motivation. We know why. And some of the most influential people in his life. We like that part. Now let's switch gears a little bit. Let's talk about maybe some challenges that you've encountered or overcome during your career change and maybe throughout your life.
Sure. Well, yeah, I mean, for me, probably the biggest thing, those who know me know a lot about this, is I've struggled with visual impairment almost all my life. And it's something I've had to work to overcome at various stages, and certainly it's been something to overcome in this transition. And, as you know, becoming an advisor, a lot of reading you have to do to pass the exams and get registered and all that kind of thing. So a lot of getting, settled that way. And there's ongoing constant learning and working with systems and so on. So navigating the visual part is very significant. So
how do you do that?
Yeah, well, here's one thing I'm very grateful for. In today's day and age, there are a lot of helps. And I learned about these really through when I started off with the Association for the Blind and Visually Impaired before I became, working there in finance. I started there as a client. And it became clear that, so things were getting more challenging. And they were very helpful. Introduced me to a lot of adaptive technology and mobility skills, things like that. So on the adaptive tech side, I mean, nowadays, there's a lot of functionality you can do, like high contrast visual on the screens. There's a lot of read alouds, Word and other Microsoft and other programs you can do. And it's extremely helpful that way. Just basic magnification, OCR readers where you can control the contrast, things like that. And then also, from a practical standpoint and encouragement standpoint, I'm very blessed to have a wonderful wife who really understands and helps me in many, many ways. So
That's awesome.
and people, what I found is, one of the really neat things I've learned, Constantine, is that, even as I've traveled, I've been able to travel internationally also in the past in some of my corporate assignments. And what I have found is that if you let people know that you have an impairment, like for instance, I use a walking stick when I'm going around, kind of a cane, if you will, visual cane. And people say, "Oh, how you doing? Can I help you?" And I've learned to say, "Yeah, you can help me. Here's what would be great. Here's what would be helpful to me." And I found you see a lot of the good nature of people come out and willingness to help. So, it all works together. And I've also found that some of the basic other skills that you have, like listening skills, ability to think, to rationalize and relationally, and just memory and things like that, really become more finely tuned as help compensate. And it's been able to, with a lot of, I would say, God's grace, been able to work through. It's not easy, I'll tell you that, but He's always provided a way. So I'm grateful for that.
That's incredible. Honestly, it sounds cheesy, but it warms my heart because I'll tell you what you see on the news and you read in the paper about break-ins, thefts, robberies, and you hear all these awful things that people are doing to each other as human beings because there's no repercussion, things like that. And then you come out like this and tell a story and you say that, you're showcasing that I have a walking stick. I obviously have some trouble. And people are offering, extending, and lending a hand and saying, hey, look, could I help you? That's pretty awesome.
It is.
I will share this. You may not know it. I do have a sister, a younger sister, who is disabled. She was born with one arm, no shoulder on the other arm. The arm that she does have is shortened to the elbow level, and she doesn't have a full hand. It's a couple of fingers. So growing up, I can tell you the thought pattern, and I'm almost a decade older than her, of what happens with sleepovers and the little things in life, and those are the things that you think, okay, those they'll overcome that. And then when you're a teenager and later on in life and getting around, how about as a female doing your own makeup or even getting dressed, taking care of yourself? She drives a car. She's independent.
Oh,
She's
good for
married,
her.
has children, lives on her own. It's been like that for a while. Doesn't take crap from anyone. And I'm sure her upbringing, kids could tend to be mean, at times. They don't know or understand, and they kind of point and laugh, and things happen. I think maybe built this insulation level of insulation and some thickness to her skin as far as how to be able to handle different situations. And I'm not going to say that it was all bad. Just like you, there have been times when people will offer a hand when she didn't even ask, and kind of made her smile a little, like, okay, this is pretty cool that somebody who doesn't know me is offering a helping hand when they see that I could be struggling,
Mm-hmm.
and making me feel um, a sense of being just like anyone else, and not making me feel uncomfortable, when I'm dropping groceries because I don't have another hand to be able to do that, which is pretty awesome.
Mm-hmm.
So, okay, so I could see how that would be definitely a challenge for you or for anyone, really,
Mm-hmm.
especially with all the material, literature, the charts. A lot of this stuff is very visual, but you have some systems in place to help you.
Yep. And the thing is, I realize that sometimes it takes me a little longer to, process this, read through the information, and I allow time. It kind of forces you to fine tune a little bit like what you're about in life. You kind of focus on what are your priorities, what do you have to spend your time, and what do you value most, and you focus on it and you get it done. I mean, I worked, I've always had to work extra hard, but I don't think it's a bad thing. And I think also one of the things I'm grateful for is I think, probably in the case of your sister, as in the case of your sister as well, when one has a disability of some sort, it increases your compassion for other people, your patience level, and just really caring about. I mean, caring for people and caring about what their situation is becomes more and more important and satisfying.
So this might kind of lead into my next question for you, which might be natural, might not, but how does that play into how you're able to offer services? So thinking about existing clients and or future prospects,
Hmm.
where do you see a strong suit for you and where you can bring value to that client?
Sure. Well, for me, I think it all starts at something you were talking about a little bit before, is like really identifying what is important to you, what is important to you as a person. So I think when I sit across from someone, I sit with someone talking about how to get started, about how I can help them financially. is really getting a sense of who are you as a person, and how does money play into that? What do you value? What are your priorities? What are your needs? And then we go from there. But really taking the time to care for the individual, as a person, and hopefully build some long-term relationships where we can maintain that kind of, just understanding of what's important to you, how are we helping you, that kind of thing. I think secondly, having the focus on the analytical part, I love to look at different types of investments, say what opportunities are there, understanding the risks, the rewards, the returns, in any kind of investment vehicle, or looking at other financial things like insurances, even something like buying a car, getting a loan, whatever is looking at a way to optimize or increase value for the person, and how I can match that up with what their needs are. That's exciting to me. So I would say, yeah, so the analytical skills, the planning, the forecasting, and really even communication skills acquired in my professional career. I mean, I've had opportunity to work with communicating some pretty complex financial concepts, business plans, business proposals to people of all different levels, peers, team members, people that worked for me, board members, senior executives, all kinds of people to really understand like what is the best way to communicate the concept. It's really trying to get understanding of where their knowledge base is, what resonates with them, because I think one of the most important things to any kind of successful planning and execution is to understand, for the person to understand why we're doing it, why it's important, and to feel comfortable that we're doing the right thing. And that really is important to me, to make sure that is clear.
And do you have a preference working with corporations, endowments, things like that, pensions, or individuals?
I like the concept of both. I like the personal side of working with individuals because I can see the direct relationship with their lives. I also like the concept of working with endowments, pension funds, foundations, because I can see that there's a broader spectrum of people it's going to benefit. And I think both are so important. So I like both sides. And I really get excited about the idea of working with a foundation or charity or some, any other kind of investment, endowment or whatever, that enables good purposes to be accomplished. Because to me, I think the meaningful thing about money is when it has a positive impact.
Let me ask you this. My wife and I were talking about this the other day. Some of the larger universities and colleges that have these massive, massive endowments that continue to grow and grow and grow. What's the end game? I mean, how are those funds? Are they used really much, if any? Is it more if there's an opportunity for the university to do X for the students? Let's say it's build a new lab. Let's say it's bring in some new technology. Is that where the funds are spent? I honestly don't know.
Yeah, well, I think it's pretty much like any situation is going to be different for each institution. I think the boards of directors and the trustees of the colleges or any kind of big institution really has a major role in deciding how the funds are going to be used. Personally, the way I've seen endowment funds used, and I think it's very valuable, is kind of the traditional management where you just continue to grow the funds, but you allocate a portion each year, which would be typically less than the long-range return on the investment, so that you always are accumulating to some degree. But you take a portion or percentage of your investment value each year and allocate that towards your current operating expenses. Whether it's scholarships, whether it's operating the agency, whatever what you're doing, it can be a very powerful source of kind of perpetual income. And if things go as you'd hope, over the years, the investments grow, the spin-off of a portion towards operating expenses each year grows, and it just lasts, and it becomes a dependable, reliable, steady source of income, and can do a lot of good. But again, it's really up to the trustees and the boards of directors to allocate a portion. So I think, looking at if a person is interested in donating to a certain area, or if someone likes to help manage a certain type of investment fund, I think it's very important to understand where the inclinations and where the priorities of those managing it are.
Yeah, and I don't manage or work with any endowments or any of the larger organizations that have a massive fund that's been accumulating assets over time. But I will say, in most of the studies, when we do some breakout sessions and whatnot, and talk to colleagues and peers, the one advantage they have is that the time horizon is open ended. Something that you and I are not fortunate enough to have, which is we have an expiration date at some point, not defined by us. We may have tranches of money that have a dedicated purpose, but they don't have that. And the other dynamic that I thought was kind of interesting is if you look at the makeup of the investment portfolio itself, on the way a lot of these endowments and pension funds are run, they have a higher exposure to alternative type of investments that you and I don't or maybe can't own in our individual portfolios. Things like private real estate, private equity. We don't have the capital required to invest in some of these smaller companies that may go boom or bust, but they have exposure there, and the returns tend to be, at least from the experiences that I've heard, and I'd love to hear your input on it, more stabilized, less correlated with the overall stock market, whether that be good or bad. When the market's up 25, 30, and they're making 10, that doesn't sound so great. But years like 2022, when the market was down 20, 30 plus percent, and they're still positive 10 or 15, that sounds pretty darn good.
Sure. Yeah, I think no matter whether it's a large institution or even for an individual person, I mean, nowadays you can get a lot of diversification, a lot of different types of asset classes you can invest in for very small investment amounts, right? I mean, things like real estate investment trusts. You can get ETFs or other mutual funds that are into those kind of investments. I mean, you can get all kinds of different types of asset classes, through mutual funds, through ETFs. And sure, there are different types of, limited partners. Well, even limited partnerships you get into if you want to, but other institutional investments, sure, we can't get into those. But I would suggest that even for a relatively, modest investment portfolio, there are plenty of opportunities to get, uncorrelated or minimally correlated, whatever kind of positive correlation you need between different asset classes with moderate investments nowadays. So I think, not quite as broad a spectrum, but you can do a lot to kind of smooth out returns. And it's all a matter of, like you mentioned, the time horizon, the relative risk that someone is comfortable with. I mean, I certainly would have a discussion with anyone I'm serving to talk about the potential risks and really get a good sense. And I actually have a profile, I mean, that we all do, of course, where we try to get a sense of where this person is comfortable, what their experience level is, because we really want to try to maximize, at any point you want to maximize your return versus your level of risk. The old efficient frontier concept, where you want to establish what's an appropriate risk level that a person can sleep well with at night, because you don't want people worrying. None of us want to be worrying about, gee, what's going to happen to my investments tomorrow.
No.
I mean, that's not a good way to live life. But to be comfortable with, I'm willing to take a certain level of risk because I realize I get a better return if I take on more risk. But then our jobs as advisors is to say, how can we allocate assets? How can we diversify? How can we use time-tested principles to say, what is the best we can do in terms of earnings for that level of risk? And it's really a partnership, with the client to say, what are you comfortable with? Here's what I would suggest, but it's your money, it's your life, and and then we'll do what we can to maximize what can be done with that kind of portfolio and perspective.
Yeah, and you mentioned the efficient frontier. For those who don't know what that is, because a lot of times we use financial terms that people know or maybe heard of but don't really understand. Essentially, there's kind of a, I guess, for lack of better terms, to say that there's a sweet spot, right? And essentially what that means, that sweet spot is the efficient frontier, where if you were to add additional risk, there's no implied real benefit. There's no increased return. That risk, there's a certain amount of risk that falls within the perspective of the client's profile that maximizes the return given that implied risk. Whereas if you lower the risk, you expect that the return will be reduced. And at times, if you increase the risk, there's a potential for more earnings. Okay, so pension question or endowment question kind of answered there. So I'll handle that debate when I get home with my wife. moving on, I guess in closing thoughts, one thing that you want to leave maybe with some prospects that might want to work with you, some words of wisdom or motivation.
Sure. Well, I would just say, my heart is I want to be of help. I think it's really, I guess, like I said, it's really important to understand what is important to you as a client, and to feel that you can trust me, that I know what I'm doing, that I'm dedicated to quality, dedicated to really knowing my stuff in terms of, for lack of a better term, knowing my, for what's good investment practices, what's good financial overall practices. Because I would say it's not just about investments; it's about the whole lifestyle. Things like being prepared for, if something were to happen to you, and how will your family be provided for? The old insurance need, but not overdoing it with the insurance. What's an appropriate level of coverage? Things like that. And just looking overall, do you have a plan that you understand your current assets and liabilities, you understand your current income and expenses, and there is just a rational way to say, gee, here's what I wanted, here's what's important to me, here's what I want to achieve, and helping you to get a plan to get there. And that's part of the planning, that experience that carries over from my corporate experience carries over into this. I've done an awful lot of modeling, financial planning and projecting, things like that. So I really enjoy working those kind of tools. But anyway, what I'm trying to say is it's having a holistic approach to look at what are you about? What's your life about? Who do you care about? And how, what I can do to help you. And because I care about the people that I want to serve. Really, it's about, that. And that's very fulfilling to me. And, being able to provide quality, good financial knowledge, advice, and service is very important to me. So I want to help the people that I work with to be successful in what they care about.
Well, for those that don't know Charlie, he's in the office and he's working diligently. He's not a person that lets things go. He'll certainly be working tirelessly on any plan. I've seen the work ethic, and I don't know if that's from the years of your business planning and in the ins and outs of working in the corporate world, or if it's just the driven focus that you have. It's the motivation that you have. It's not letting things go and finding a solution. And sometimes when things are going well, that's okay. But if you just continue doing the same old thing, you're going to continue with the same path and same type of results. But there's always ways to improve, small tweaks here and there. So I definitely see the drive, the poise. We heard about your background. We know the client base that you enjoy serving. I would tell you, if you want to find out more information about Charlie, you could pop on our website, monarchwealthmanagement.com, and if you choose the team, Charlie is listed there. You've got some more background and insight. There is an option for you to request a meeting with Charlie. I encourage you to check him out on our website. And I anticipate some more commentary from Charlie throughout the years, both through the podcast and maybe some blogs. But thanks again, Charlie, for coming on and telling your story. I think that's important. I'm glad we had the time to chat and vocalize things and broadcast your message to clients and prospects.
Thanks, Constantine. I'm glad to, and I appreciate the opportunity. It's been great talking with you.
Likewise. Thanks again for listening to the Pennywise Financial Podcast. Constantine here at Monarch Wealth Management. Thanks again. We'll see you soon.
You've been listening to Pennywise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is Pennywise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, Consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.